Hey everybody, welcome back to Actual Investing. Now today, SolarEdge stock, ticker SEDG, once a Wall Street darling, is now hitting multi-year lows. So what happened to this stock that was once a significant outperformer versus the NASDAQ that brought it down to where it is today? To understand that, I think we need to talk about what SolarEdge does, what sets them apart from their competitors, and what's going on financially with the underlying business. Because it's not looking good. So SolarEdge, as you can guess by the name, is a solar company. Now, SolarEdge doesn't make panels and they're not a utility company. What they make are string inverters. Now, when you have a solar project, you need something to convert the DC energy into AC, which is what powers appliances and things in your home. So what you need to do is invert that current from DC to AC, and that's what SolarEdge products do. What they sell are called string inverters, so they essentially daisy chain together all of the solar panels on, say, a roof or in a solar garden and connect to this one string inverter, which then goes to the utility grid, or if it's a residential solar project, directly to your house. Now, I've talked a bit on this channel about a company called Enphase, which makes something called a microinverter. When we think about what SolarEdge does, groups of solar panels are daisy chained together with wires and then connect to one inverter that connects to the house or the grid. With microinverters, there's one on each panel, so that if something goes wrong with one of the microinverters, it doesn't impact the entire solar system. Whereas with string inverters, if something goes wrong with one of these, it's going to affect everything because they're all daisy chained together. So part of the problem with SolarEdge stock is that they're using what some believe is an outdated string inverter technology, as opposed to Enphase's sometimes preferable microinverter technology. I think it's pretty easy to see the benefits of microinverters like what Enphase sells. So part of the reason that SolarEdge may be beaten down is because of competition from companies like Enphase, ticker ENPH. Now, that's certainly not the only thing going on, because Enphase has also not fared too well. Both companies are being plagued by high interest rates and a weakening American consumer. Now, it's not just America either that's struggling. Both these companies, Enphase and SolarEdge, have expanded outside the US. SolarEdge is actually an Israeli company, whereas Enphase is American. But SolarEdge actually has a greater percentage of their revenues coming from outside the US. So you would think that they would be somewhat shielded from these economic conditions. When we look at SolarEdge's investor relations page, we can see that they're launching new products and expanding in Europe. So here we see a press release from just today. SolarEdge launches new powerful solution for small to medium utility scale and dual use solar segment in Germany. Press release from yesterday. SolarEdge unveils its next-generation residential solar and storage portfolio at Intersolar 2024. So look at this. They have a battery pack, sort of like the ones that Tesla manufactures, so that you can install SolarEdge and store the energy that your solar panels generate for off-peak times. And then another press release from 3 days ago. These guys have gone press release crazy. SolarEdge announces plans for global rollout of its first-of-a-kind energy optimization software platform for commercial and industrial applications. Okay, so that might be good because, as we know, software businesses have great recurring revenues and great gross margins. So maybe this is just what SolarEdge needs. Here's an illustration of the SolarEdge commercial solar installation in the UK. That's really cool. It looks like they have these massive little gardens of solar panels, probably all connected with string inverters from SolarEdge. And it looks like they are using them to potentially charge electric vehicles here in this parking lot. So SolarEdge is rolling out new innovative products that people need, potentially a new software platform to improve their margins, and they're expanding outside the US. So all of this should be really good for SolarEdge. So why is their stock at multi-decade lows? Well, it's about their financials. Now let's take a look. This is their most recent quarterly earnings report. And right off the bat, we see a lot of negative news. So for one thing, their gross margins. Now, gross margins are essentially your revenue or sales minus your cost of revenues or cost of goods sold. So essentially, gross margin of 0 means you're selling something for exactly what it costs to make. Most companies don't do that. Most companies upcharge so that they can make a profit, and that's a positive gross margin. So if you make a solar inverter for $10 and you sell it for $15, that is a 33% gross margin. $5 out of $15. $5 is gross profit, $15 is the selling price, 33% gross margin. So what's going on with SolarEdge is that they have negative gross margins. That means for every product that they sell, they are losing money before actually paying any expenses. They are losing money on a gross level, the very, very top level. Now that's temporary. They have not always had negative gross margins. This is due to some inventory issues that are going on with the company. However, it's not a great look. So let's look ahead at next quarter and see if any of this is going to improve. Outlook for second quarter, non-GAAP gross margin is expected to be in the range of -4% to 0%, and that includes money from the IRA manufacturing tax credit. Now, if you are not familiar with it, the IRA is the Inflation Reduction Act. It's a bill that was passed in the US that gives money to American manufacturers of clean energy products. So Enphase and First Solar are both US companies, so they benefit a lot from this. SolarEdge is an Israeli company, and even though they do have operations in the US, they don't benefit as heavily as other companies from this IRA. So even with the free government money that they're getting, their gross margins are still expected to be -4% to nothing in the next quarter. So what we see is that even if they had no expenses, they still would not be turning any profit whatsoever. And that's not true. They do have lots of expenses. They still have to pay their employees. They still have to advertise. They still have to build products. So this is not looking good for SolarEdge. If they said, hey, these negative gross margins are just a one-quarter thing, we'll be right back on track next quarter, maybe the market could forgive them a little bit. But this seems to be an ongoing issue with no end in sight currently. Now, I'm sure that they will become gross margin positive again at some point, but we don't know when, and the market does not like uncertainty, so the market is punishing the stock heavily. They're also expecting revenues for next quarter to be in the range of $225 to $255 million. Revenues from this last quarter were $204 million, so that is a nice acceleration, but if we zoom out a bit, that's still below their December 2023 quarter, so they're still playing catch up a bit. However, it does look like this most recent quarter was the bottom. Okay, so if SolarEdge's revenues have in fact bottomed and they're going to continue to grow from here, does that mean that this is a turnaround story and it's a perfect time to buy the dip? Or does this company not have any hope left? Well, in order to look at that, we really need to look at survivability, because this stock needs to survive long enough to go back to A, a gross profit, and B, a net profit. Those are not the same thing. So let's take a look here. SolarEdge has a pretty decent balance sheet. Let's take a look in more detail from their recent press release. So most press releases that a company puts out for their quarterly report will have their income statement, balance sheet, and statement of cash flows for the quarter on the press release. And SolarEdge is no different. SolarEdge does have some great investor relations, so we have to give them points for that. Now, what we see is that their balance sheet is weakening because, like I said, they're not profitable, so they're likely burning some cash. So we see that last quarter, at the end of 2023, they had cash and equivalents of about $340 million, but they also have marketable securities of $500 million. So together, let's call it maybe $860 million of cash-like instruments. This quarter, that is down to $670 million of cash-like instruments. So about $200 million of cash and cash equivalents were burned in the last quarter. So if they keep going at this rate, burning $200 million of cash and equivalents each quarter, they only have about 3 quarters left to go, give or take a little bit. Now, obviously, that's not good. If they can't manage to turn things around and get back to a point where they're not burning cash within the next 3 quarters, they may have to look at options such as additional debt financing, which they already have debt of almost $2 billion on their balance sheet, so that might not be the best idea, especially with interest rates so high. Other options could be dilution, where they sell additional shares to the market in order to raise cash, or they might need a lifeline from another company, which will definitely not be good for shareholders. So there's a lot of risks going on with SolarEdge. What caused them to be in this position in the first place was, to summarize, perhaps an inferior product versus Enphase's microinverters, a weakening consumer and a lower demand for residential solar, lowering gas prices. Gas prices have been flat lately, and when gas prices are high, more people are spurred to go out and get EVs and get solar panels to charge those EVs. When gas prices are low, there's just not as much of an incentive to buy an EV and to buy a solar panel project, especially with rates being so high. So that is also hurting SolarEdge. And excess inventory issues, where they provided a whole bunch of inventory to their distributors when things were really good. However, things quickly turned bad and these distributors didn't need more products, so they had all this excess inventory and SolarEdge sales just plummeted very, very quickly. It's the same thing that happened with Enphase. It's the same thing that happens with lots of chip stocks. Okay, so the question you're all wondering is SolarEdge a buy, a sell, or a hold? To me, it is a sell. Now, this is only because A, I don't invest in companies with negative gross margins, and I don't know when their margins are going to be positive again. And B, I like to minimize risk as much as possible in my portfolio. So if I'm going to invest in a small cap company, SolarEdge is now a small cap company, if you can believe it, they're less than $2 billion in market cap, I want to make sure that this is a small cap company that is profitable and that has as few risks as possible. SolarEdge is a small cap company that has a ton of risks on top of being small. So there's just not a lot for me that's going for SolarEdge right now. For me, I would be much more inclined to invest in a company like Enphase, which is still facing a lot of headwinds, make no mistake about that. However, to me, they have the superior product, and they are the company that I believe is going to be able to turn themselves around before SolarEdge does. We can see that Enphase is actually up a bit off their year lows, and even though they are not profitable as of the last quarter, they have been profitable previously, and their gross margins are still quite positive and quite strong, actually around the 40% mark. So those are my thoughts on SolarEdge. To conclude, I am bearish on SolarEdge, and I would opt for a company called Enphase instead. However, both companies come with a lot of risks, and you should really tread carefully if you're interested in either of these companies. The bull case is that as interest rates come down, if SolarEdge can weather the storm, their stock price is beaten down, they're at a very, very low valuation compared to sales, and if they can get back to that gross profit and eventually that net profit, their stock should recover very nicely and soar to the moon again someday. But that's a big risk. So if you are an investor in SolarEdge, I don't blame you. I understand. However, that is just outside of my risk tolerance. So I will be sitting on the sidelines and rooting for you guys from there. I hope you all enjoyed the video. If you did, please hit the like button. That really helps out the channel a lot. And if you're new, please subscribe. I make deep dive stock videos pretty regularly, so if that's something you're interested in, please follow along. I try to be as objective as possible and look at the bear and bull case for all the stocks I analyze. Thank you guys so much for watching, and I hope you all have an amazing day.